Mirae Asset Nifty 50 Index Fund. Will investing in this fund help you create wealth in the long run? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. But before analyzing this fund, let us first understand a few basic details about this. So as an NFO, it opens on 10th October 2024 and closes on 18th October 2024. And some of the key features of this fund is this is an open-ended fund type which belongs to the category of equity large cap. It has Nifty 50 TRA as its benchmark index. There is no entry load as well as exit load in this fund. And the minimum investment amount you need to start investing in this fund is 5,000 rupees. And the fund managers for this fund are Ms. Ekta Gala and Mr. Vishal Singh. And according to the riskometer, the risk involved in this fund seems to be very high. And the primary investment objective of this fund is to provide returns to the investors which before expenses closely correspond to the total returns of the securities as represented by the underlying index, which can be subjected to tracking error as this is an index fund. So now as we have a basic understanding about this fund, let us move on to understand the index it is representing, which is the Nifty 50 index. So the Nifty 50 index is a well diversified 50 companies index reflecting the overall market condition. So Nifty 50 index is computed using the free float market capitalization method, and this index can be used for a variety of purposes such as benchmarking fund portfolios, launching of index funds, ETFs and other structured products. Now let's take a look at the sectors this index represents. So the sectors it represents are financial services, IT, oil, gas and consumable fuels, FMCG, automobile and auto components, telecommunication, healthcare, construction, metals and mining, power, consumer durables, customer services, capital goods. So the highest weightage is given to the financial services sector by a weightage of 32.92%, while the capital goods sector has the least weightage of 0.88%. Now if you take a look at the top 10 holdings of this index, then there are HDFC Bank Limited, Reliance Industries Limited, ICICI Bank Limited, Infosys Limited, ITC Limited, Bharti Airtel Limited, Tata Consultancy Services Limited, Larsen & Toubro Limited, Axis Bank Limited, State Bank of India. So the top first position is given to the HDFC Bank Limited by a weightage of 11.34%, while the top 10 position is given to the State Bank of India with a weightage of 2.62%. Now, as you can see from the data gathered that in 1 year, as of the index returns on September 30, 2024, in 1 year it has produced a return of 32.50%. In 5 years, it has produced a return of 18.52%. So now, and since inception, you can see it has produced a return of 11.89%. And from the graph represented here, you can see that compared to short-term period, long-term period, it has consistently performed well. Now, as we have a basic understanding about this fund as well as the index it is representing, now let us analyze whether investing in this will be suitable to our investment portfolio or not by analyzing the pros and cons of investing in this fund. So, let's start with the positives. There are 4 key major advantages here. So one is the exposure to India's top 50 companies. Because this fund provides exposure to Nifty 50, which consists of India's largest and most established companies. These are leaders across various sectors, offering a relatively stable and secure investment option. So another advantage is the low-cost passive strategy. So as an index fund, the Mirae Asset Nifty 50 Index Fund follows a passive investment strategy, which typically comes with lower expense ratios compared to actively managed funds. This makes it a cost-efficient option for investors who want to keep their fees low. Third advantage is the diversification across sectors. So the fund covers multiple sectors like financials, IT, consumer goods and more, ensuring that your investment is diversified and not overly reliant on one industry. And lastly, it is ideal for long-term investors. So if you're a long-term investor, the fund provides the opportunity to benefit from the growth of blue chip companies that tend to perform well over time even during market volatility. So these are some of the key advantages of this fund. Now let us see the key disadvantages of the fund. Cons. Number one, limited growth potential. So since the fund focuses on large cap stock, the growth potential may be lower compared to the mid cap or small cap fund. So large cap companies are usually more stable but tend to grow at a slower pace. Number two, market dependent performance. So as a passive fund, the Mirae Asset Nifty 50 index fund tracks the performance of the Nifty 50. So if the index underperforms, there is no active management here to protect your investment or capitalize on short term financial opportunities from the market. So this is also another advantage. And another major advantage is the underperformance in bull market. So during bull market, where mid cap and small cap stocks often outperform, this fund may lag behind in terms of return. So it might not capture the higher growth even in smaller companies. So another potential drawback here is the concentration risk. So the Nifty 50 index is dominated by a few sectors such as financials and IT, which can expose the fund to sectoral risk if these industries especially experience downturns. So these are also some potential risks you must carefully consider before choosing to invest in this fund. Finally, what is the final takeaway from the analysis on the Mirae Asset Nifty 50 index fund? Is it worth investing or not? So from our analysis, what we can see is this is a great choice for investors seeking low cost, long term exposure to India's top companies. However, its limited growth potential and reliance on large cap makes it better suited for conservative investors with a long term horizon. So it completely depends on what kind of investor you are, what kind of risk tolerance you have, and in what time horizon you want to achieve your financial goals. So it's completely up to you as an investor to decide whether investing in this will be suitable to your investment portfolio or not. But our personal opinion is this might be suitable for ultra conservative investor who's not willing to invest in actively managed funds at all. But even then, there are similar index funds out there in the market that has a lower expense ratio and a lower tracking error compared to this index fund. And also, if you're an aggressive investor who's willing to take a lot of risk and you want your fund's investment to outperform the market, then you can choose to invest in actively managed funds which have the potential to deliver higher returns than this fund, because as an index fund it will only try to replicate the market, good or bad. It will only try to replicate the index, good or bad. So it will not try to outperform the index but only try to perfectly replicate the index returns as closely as possible. But as an actively managed fund, it tends to outperform the market itself. So it has that potential compared to index funds. So if you want your investments to have these factors, it's better to invest in an actively managed fund. And also, if you need professional guidance to decide whether investing in a fund will be suitable to your investment portfolio or not, because you either do not have the time to research about it or you do not have that particular sufficient knowledge to know whether it will be suitable for you or not, then it's better if you consult with a certified financial planner who will be looking at the suitability of the investment objective, risk profile, overlap ratio, allocation, on all these factors to see whether it will be suitable for you in the long term or not. So definitely consulting with a certified financial planner and gaining professional guidance would also helpful for you in the long run. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.